Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello, everyone, and welcome to Accredited Investor Markets Radio. I'm Christopher Cahill, your host. Later on, we'll be speaking with Carl Richards. Carl Richards is an artist and an investment advisor who is famous for his drawings in the New York Times, among other places, and a book called One Page Financial Plan. But before we get to that, let's talk about a few of the offerings on www.financialpoise.com. This week, financialpoise.com is the gateway website that gets you eventually to this program and to this program's mother site, which is AccreditedInvestorMarkets.com. There are new features on the Financial Poise website, including life hacks, which are short pieces about life. One of them is entitled, I Want a Hippopotamus for Christmas, dated May 11th, 2015. And how can you not read an article with that title? Well, it's not about hippopotamuses. It's about 3D printers that you can get in your home. This one's called the EcoCycle Cube. Of course, EcoCycle is spelled with a K. And the short article links to the product site, links to Engadget, which is an industry site, and also to a Guardian article which tell you all about it. That's just one piece of our financialpoise.com website. In addition, there is an article about the recent GM case involving ignition switches. Now, the narrative in media that have treated this is about people dying or being hurt by poorly made ignition switches and measures GM did or did not take in advance of this being found out by the public, all in the context of a GM bankruptcy. Well, on Commercial Bankruptcy Investor, which is a site you can gain access to through the gateway site of Financial Poise, you'll find a plain English article which explains the bankruptcy law context so that you can understand why it is that the court may have ruled, so that you can understand why it is that the court ruled the way it did in insulating new GM from liabilities of old GM. The name of the article is Judge's Ruling Protects GM Against Certain Ignition Switch Lawsuits, written by frequent contributor Jonathan Peterson, dated April 20th, 2015, but you can get there right now. Another article with a beguiling title is Putting Money Where Someone Else's Mouth or Some Other Body Part Is, Investing in Someone's Surgery, written by our own Billy Ray Valentine on AccreditedInvestorMarkets.com, dated May 6, 2015. Well, what could this possibly be about? Well, you can lend money to people, strangers, through peer-to-peer lending. And if you can lend money to strangers, why can't you lend money to strangers who are having surgery and might be willing to pay you back at certain interest rates? The article on Accredited Investor Markets links to an underlying Bloomberg piece. The Bloomberg piece quotes Brendan Ross, the president of Direct Lending Investment. Brendan Ross was our guest here on Accredited Investor Markets Radio in episode 29, which you can get on AccreditedInvestorMarkets.com or AIMkts.com and listen to at any time at your leisure. And you can learn about peer-to-peer investing, direct lending investment, and indirectly how it is you can lend money to somebody you don't know to help them fix themselves up. Now, I'll look back to last week. Last week, we talked about bourbon because, well, it's fun to talk about bourbon. And bourbon was newsworthy because a scheme to steal barrels of bourbon was effected on some distilleries and then found out it ended up being a conspiracy of 9 people over years, just rolling out barrels of bourbon from Wild Turkey Distillery, among others. So it's kind of a fun topic, provided you don't have a financial interest in the insurance companies who had to pay. But anyway, the story continues in the Wall Street Journal, May 12th, 2015. An article entitled, Bourbon Feels the Burn of a Barrel Shortage. Well, from 2010 to 2015, bourbon consumption in the United States has risen by 35%. So there's been a great increase in demand for bourbon. Of course, that also means there's been a corresponding increase in demand for bourbon barrels, which are not reused. They have to be fashioned. They're made out of white oak and are fashioned by barrel makers in the United States. Now, also in 2010, we were in the throes of a financial crisis, which led to the cratering of the housing market, including the market for cutting down white oak trees and turning them into wood that can be used to make new homes, as well as wood that can be used to make barrels. Even if we hadn't had a cratering of the housing market, such a increase in demand for bourbon would have led to a shortage in barrels. Knowing that we were having a cratering in the housing market and therefore a diminution of cutting white oak, one could have surmised that barrel consumption would have remained even and correctly predicted the shortage that came. Well, it pays to know your industries, I guess. Well, from one palpable industry to another, let's move from bourbon to trucking. Now, my three favorite songs about trucking do not include the Grateful Dead's iconic song Truckin', which is not about hauling things from place to place, but rather about the misfortunes of a rock band on the road. These songs also do not include the 1973 Eddie Kendricks number, Truckin', which is about dance moves. A great song, but it's not about hauling stuff from place to place. My three favorite songs about trucking, number 3 is Movin' On by Merle Haggard, 1975, the theme song for a show of the same name on NBC. My second favorite is Neil Young and Waylon Jennings' Bound for Glory from the 1985 Old Ways album, a story song. My favorite trucking song is also a story song by Tom Waits entitled Big Joe and Phantom 309 from the 1975 Nighthawks at the Diner album. Now, in Big Joe and Phantom 309, what happens in that song is that there's a hitchhiker who's thumbing his way back home after failing out east. He's got no money, and he's stranded. But he gets picked up by a trucker, a friendly man, a big man, named Big Joe. Big Joe says, Big Joe's the name, and this here rig's called Phantom 309. Don't you know, son, this here rig will be putting them all to shame. Why, there ain't a driver on this or any other line, for that matter, that's seen nothing but the taillights of Big Joe and Phantom 309. After an entire night of talking and driving and smoking Viceroys, Big Joe had to drop off the young man because he was going to take a turn. And he flipped the man a dime and said, go on in there, son, and get yourself a hot cup of coffee on Big Joe. And off Big Joe drove into the night. Faithfully, the hitchhiker announced to the diner, who funded his cup of coffee, was greeted with a reverential silence because, you see, Big Joe had died nearly 10 years earlier, nearby, when he jackknifed his rig in order to avoid a busload of kids. Now, is it true about Big Joe and Phantom 309? Well, it's a whole lot easier to suspend disbelief without GPS and without backhaul apps recording every move of every truck. Which gets us to the Wall Street Journal, May 13th, 2015, article entitled Independent Truckers Try New Apps. It's written by Robbie Whalen. And I think you know where we're going with this. Independent truckers have backhaul issues. That is, they carry a bunch of stuff somewhere, and then they have to get back to where it was they came from. That's called the backhaul problem. What they want to avoid is deadheading, which has nothing to do with the Grateful Dead, because trucking and truckin' have nothing to do with one another. But it does mean, deadheading does mean driving without making a profit, driving without carrying anything. In the old days, and we're talking going back a ways, a trucker would go up to a truck stop and there'd be handwritten notes on a bulletin board with phone numbers, and the trucker would call them up. Maybe that number would be a producer who wants the trucker to take something somewhere, but more likely the trucker would be phoning a broker. So there were people who knew who had stuff to be picked up and who knew how to get truckers to call them to arrange the pickup and delivery. Well, you might recall that some weeks ago we spoke about the West Coast port crisis when there was a series of strikes, and how port masters had developed or adapted or purchased, I can't remember which, an Uber-like app. The Uber-like app helped the port masters with their dearth of people really helping them take containers off the port and putting them on the trucks. Get containers off the port in the most efficient manner, because they would be prearranged between truck and port master. That trucker would take the next container and take it wherever it was going to go because of the intervention of this app. Well, similarly, and away from the ports, companies with names like Keychain Logistics, Trucker Path, and U-Ship, and that's lowercase u, uppercase S-H-I-P, all one word, of course, are apps that bring truckers and producers together and cure this logistics problem without the phoning of brokers. So brokers are going to be put out of business in due course once everybody gets used to doing this. These apps go a little further than brokers did by data tracking the behavior of the drivers themselves and by data tracking the logistics of all relevant producers, so it can actually predict when to put drivers and producers together. But as hinted above, no Phantom 309 can subsist where there's GPS tracking and apps that dog every move of every trucker all over the United States and Canada. So we gain in economic efficiency. We gain in the problems of backhaul and deadheading. But we lose in poetry. And now on to the poetry of Mr. Richards.
My guest today is Carl Richards. He's a financial advisor who will speak of his recent book, The One-Page Financial Plan, and he will also speak of his activities as the sketch guy in the New York Times. Carl is a certified financial planner and the director of investor education for the BAM Alliance, a community of over 130 independent wealth management firms throughout the United States. Carl is the creator of the weekly Sketch Guy column in the New York Times and is a columnist for Morningstar Advisor. Carl has also been featured on Marketplace Money, The Leonard Lopate Show, Oprah.com, and Forbes.com. Through his simple sketches, well, seemingly simple, Carl makes complex financial concepts easy to understand. His sketches also serve as the foundation for his first book, The Behavior Gap, Simple Ways to Stop Doing Dumb Things with Money. Carl's art appeared in a solo show at the Kimball Art Center in Park City, Utah. Other showings include the Parsons Gallery in New York, the Schultz Museum, and an upcoming exhibit at the Mansion House in London. His decommissioned work is on display in businesses and educational institutions across the country. Carl lives with his family in Park City, Utah. And I got to say, Carl, Mansion House, Parsons Gallery, not bad.
Yeah, thanks, Christopher. It's really good to be chatting with you today.
Great. So your current book is the full title, The One-Page Financial Plan, A Simple Way to Be Smart About Money, and it follows the immediately prior book, The Behavior Gap, Simple Ways to Stop Doing Dumb Things with Money. So you're going from dumb to smart.
Right. Sure hope so.
I'd like to explore a few quotes that I really liked from the first chapter of the book. But first, what would you say is the fundamental value proposition of the new book?
It's really the goal was to take all the complexity. I just kept talking to people who felt, and these were, smart, successful people who felt like every time the subject of, planning for their financial future would come up, they were just overwhelmed. So that was really the goal, was to take all the mystery out of it, make it easy, give people some really simple steps to walk through to feel like they were making better decisions with their money.
So there's some kind of reluctance or reticence or maybe even fear that afflicts even successful and financially sophisticated people. Is that fair to say?
Yeah, I think there seems to be a unique sort of flavor, if you will, of anxiety, and a unique strain of anxiety when it comes to money. And I think partially it's because, sure, there's plenty of us that can talk about the economy and markets, but when it gets down to personal finance, we were never taught how to deal with that. In fact, we were taught the opposite, Christopher, right? We were taught to never talk about money, sex, politics, and religion in polite company. So I think even when we're successful, even, this sort of issue of how we deal with personal finance issues still sort of strikes fear into most of us.
There's another element to it that I think came out in a quote I will read right now from the first chapter of the new book. Quote, "Of course, it's not just fear of making a mistake that holds us back from action. It is also the mistakes we've already made that we don't want to own up to," end quote. So it's kind of a pride thing or a shame thing as well, just to not have been good with your money in the past.
Yeah, I mean, look, and the thing we have to realize is that you're in good company, meaning if you've made mistakes with money, you're in good company, meaning everybody you see around you has too. But there's shame is a powerful, powerful force, and often we feel that way, like, oh man, how could we have we even know that those mistakes, that it was a mistake. We did something wrong. It might have even been stupid. I mean, I have plenty of examples in my own life, and so to kind of come to grips with that and realize, like I always suggest, putting on your no shame, no blame hat. Right? The shame and blame don't help. The lesson from the past helps, but it only helps in terms of its impact on the future. So if you put on your no shame, no blame hat, own up to it, figure it out, and move forward. It's time. Let it go.
Well, along those lines, you do reflect on a mistake or two you've made, and at one point you simply state, quote, "I was just following the crowd," end quote, which has to be true for most people because that's how we have the crowd. And
Right.
and it also makes me think about how following the crowd is such a fundamentally destructive investment habit that a lot of people have, whether it's following the crowd up or following the crowd down.
It's a trait. I don't know if it's necessarily genetic, but it's a trait that's kept us alive as a species, and it's good for us just in terms of survival. But it's really bad for us when it comes to investing. I mean, what we end up doing, right, is we want to buy something after everybody else has already bought it, and we want to sell something when everybody else is selling it. And so that translates into buying something high and selling it low, and we all know that's dumb, but it feels good, right? So there's this competing thing going on. It feels good, but it's totally irrational and actually sort of hazardous to your wealth, that's for sure.
All right, Carl, let's go to another quote, which kind of moves us from the blame and shame to, how to think about money. We think about money abstractly as, money, not connected necessarily with ourselves more personally, but you say, quote, "We're going to start with some questions not simply about how to save and invest your money, but about why you're doing it in the first place," end quote.
Yeah, I don't know when. It's just so interesting that money somehow has lost a little bit of this. We failed to make that connect. It's just a means of exchange, right? Like I don't know what you used to exchange, but you might have used to exchange something really valuable that you grew for something over here that this guy built, and you made the connection. But sometimes we forget right now, or we've started to forget, that we exchange time for money, and then we take the money and we exchange it for something else that probably involves somebody else's time to make. So getting really connected about, like, sort of why are we doing these things? And not from remember, you still have your no shame, no blame hat on. So not from a blame perspective, but just purely from an awareness perspective. We start to just say, if we could just start to ask ourselves, or not even ask ourselves, just notice what we're doing when we use money. Just notice it. You don't have to ask yourself any questions. You don't have to just notice. Like, isn't that interesting? I spend a lot more on lunch than I ever thought I did. Is it really that valuable to me? Because over here, I'm telling my kid that I can't coach their soccer team because they've got to work, and I spend that much money, at least 1 hour worth of money a day on lunch. Anyway, we're always making these trade-offs, and most of the time we're doing them unconsciously. And I'm just saying, why don't we just start noticing them so that we can make them more aligned in terms of the trade-offs we make? Instead of doing it by accident, let's do it on purpose.
Well, in contradistinction, I find it very easy to justify paying for parking in a garage because the misery that looking for parking inflicts on me, especially in certain parts of my native city, Chicago. My time is more valuable than that, no matter what I'm doing with it.
Yeah, and I think, but that's the only point here, Christopher, is like, right, that we're just aware of the trade-off we're making. Like, in some cases, I love the example of taking flights, right? Like, in some cases, it may make more sense for you to have 2 or 3 layovers and save the $100 on your ticket because you value that money more than you value the time. And is that okay? Absolutely. But in other cases, I may value time more than I value money, and I'll pay the extra $100 to skip those 2 connecting flights and save myself 3 hours. So either way, it's not bad or good. It's just let's just make those decisions on purpose.
Okay, so when you're getting to a one-page financial plan, which from its title automatically suggests a stripped down to the essence kind of plan, we're leading with our fundamental values, aren't we?
Yeah, I love that word, actually, stripped down to its essence. That's a great description. It's not that there's not lots of pages of work that went on in order to get there, but I found it really valuable to take sort of all the other stuff, the college education plans, the life insurance, everything else, and kind of put it in a folder and write just really quickly on one piece of paper, a statement of why I'm doing all these things. And so the top of our paper, my wife and I, our paper says, our one-page plan says spending time with our family, mainly outside.
That's
why we're doing
Park City, Utah, of course. Outside is all around you.
Yeah, and then there's the second one, which is time to serve in the community. And so those are the 2 reasons why we do this stuff. And then there's just simply 3 or 4 of our top-of-mind goals right now, the things we're working on right now, all on one piece of paper. And, of course, we know that those goals are going to change, and in some cases the values may even change. And that's why it's on a piece of paper, because I didn't, craft it with a chisel into stone. I can just throw that piece of paper out and write a new one with a new Sharpie, and off we go.
Well, okay. So you orient yourself with principal, financial, and money sort of usage goals, but all of those in alignment with more fundamental values of how you want to live your life. And then you go about getting financial advice. And here's one more quote that really hit home to me as an attorney. And the quote is, "Stop giving me options I'm not qualified to evaluate." And I got to say how frustrating it is for clients of lawyers to be given simple options from the attorney. It's nice to have options, but sometimes, the client isn't really capable of distinguishing among them as far as their long-term and short-term implications. And advice is certainly more than just presenting raw options to people in languages and with implications they don't understand. It's not kosher for an attorney, and I can't imagine it is for a financial advisor either.
Yeah, it's funny you should mention that. One of the stories that sticks out in my mind about options is my wife and I went to have some real basic estate planning work done. It was mainly, living wills and the custodial issues for the kids. And we sat down with an attorney who was a friend of ours, and we started out in the foyer, and we had to fill out like a 5-page questionnaire, which should have been my first warning. And then we walked in, and he said, based on what I've reviewed here, I think you have 2 options. And my wife, who doesn't have a real problem being direct, said, hey, that's not why we came here. We didn't come here to have you present us 2 options and for us to choose between things that we don't even know what we don't even know what they mean. We came here for you to ask enough questions to get to know our situation so thoroughly that you could tell us what to do. That's why we're here. And I think, I think that's, to me, that's sort of at the essence of this whole discussion, because we're all so busy. We don't have any more room. I mean, I had almost the exact same experience with my dog Zeke and the vet, who tried to lay out 3 options in terms of medicine for my dog that was having had some stomach issues. And I remember when she got into option number 2, I could feel my head starting to, and I stopped her and said, hey, wait. Just tell me what to do. Well, Carl, I said, no. Let's pretend now like Zeke is your dog.
Yeah.
You've done all the tests. What are you going to do? And she told me, I said, here's my credit card. Give me the medicine. I'm out of here, right? And Zeke's been fine ever since. So
good for Zeke.
I just think we have too many. None of us have the cognitive room. We all suffer from this sort of mental fatigue that comes with so many options. You'd think that would be good, but a great book, The Paradox of Choice, is really true. The more choice we have, the more complex things seem to get, and that leads to anxiety and worry and fear.
Well, that's you're talking about the experience of the customer. We can add a log onto that fire, which is when I'm presented with options of that nature in that situation where I really cannot distinguish among them, I feel like especially a professional advisor is principally covering his or her backside. After all, I chose that option. Instead of simply giving me the right advice based upon the right information and sending me on my way. I don't like having that burden shifted to me. I don't like litigation positions being taken up by my advisor when I'm seeking advice.
No, I agree, and I think that's often why it's done, right?
Yes.
They say, well, I've got to present 2 or 3 options, but the reality is most of us don't want that. We want you to understand us thoroughly and give us the advice we need.
Well, these days, in the financial news, which I know is not read by everybody, a big issue is about choosing a financial advisor or a broker and retirement advisors and the different standards that each of these is required to adhere to. And I think the fundamental distinction as it's articulated in the press is that a financial advisor like yourself has a, quote, fiduciary standard, has to meet what's called a fiduciary standard the way other fiduciaries do. Well, along those lines, a current issue in the financial press is with respect to the standards required of brokers on the one hand and financial advisors on the other. The standard for financial advisors is regarded as higher than the standard for brokers, and the federal government is seeking to raise those standards through various initiatives of the Department of Labor and the Securities and Exchange Commission. Well, okay. I guess I would ask you, what does that matter? And maybe there are more fundamental questions one should ask either his financial advisor or her broker.
Yeah, it's interesting, even hearing you sort of ask that question. It's really complex, and it doesn't have to be that complex. So let me see if I can make it simple. To me, the distinction is simply one of putting somebody's interests ahead of your own. So to act as a fiduciary, in my mind, if I were to sort of draw this, which I actually have, I would a fiduciary would put you, the person, at the center of the equation, and somebody who might be called a broker who's following a suitability standard would put the product or their firm or themselves at the center of the equation. And I think people's eyes start to glaze over as soon as we get into suitability versus fiduciary, SEC, and all of that stuff. I think the simple way to do this is the relationship you have with somebody who's giving you advice is always like, you would never go to the Toyota dealership and expect the salesperson to tell you that you should have a Honda if the Honda was the best thing for your family. Like, they're clearly, they're going to try and sell you a Toyota. When you go to get financial advice, you just need to understand, is the person going to try and sell you a Toyota, or are they going to tell you what's best for you? And the best way I know of doing that is to follow the money. So some of the simple questions to ask. Now, realize that the answers to this question does not disqualify someone. It just is really important for you to understand as you make your decision on who to hire. And so as you go to hire somebody to give you financial advice, some simple questions are, how much does this cost me? Right? So and I'm going to give you another question that's really important that you ask both. How much does this cost me? Somebody should be able to tell you that. And if you get told nothing, which surprisingly often people get told that, then the follow-up question obviously should be, oh, so you're a nonprofit. So you'll find a financial advisor, somebody you want to work with at least, will be open about that discussion. Sure, that's an important thing to understand. Let's talk about it. Let me walk you through. Is there going to be a conflict? Yes, of course. Whenever money's exchanged, there's a conflict. But real advisors are open about the potential conflicts of interest and talk with you about how to manage them, right? So that's question number one. The second question that's really important is, how are you compensated? So you're asking the advisor this. Mr. Advisor, how are you compensated for the advice you're giving me? Those are 2 separate questions. And sort of a follow-on to that compensation question simply is, do you get paid by anybody other than me? Right? Do you get paid based on do you get paid differently based on the products you suggest? Does that rule anybody out? No. It doesn't necessarily. It's just really important information because they may be getting paid in the form of trips or bonuses to sell certain product. Like the Toyota salesperson would get paid more to sell the Toyota than to tell you to go buy a Honda. If that's the case, you just want to know. Now, I think the cleanest relationship is one where an advisor can say, really, you know, the only line item on our income sheet, I only get paid by compensation from clients, meaning they're not receiving anything from product providers. That's the cleanest, but that doesn't necessarily mean it's the only way. It just means you want to know before you engage in a relationship.
Can you give an example or two of what kinds of conflicts of interest might arise if an advisor is being honest with you? Not necessarily a shifty advisor, but just any advisor.
Sure. Like, I mean, there are plenty, but I'll give you an easy one. Like even among advisors that would consider themselves fiduciaries, here's a challenging one. Like a lot of those advisors charge, and I happen to believe this is the right way to do it, but they charge a percentage of the assets that they manage, right? So let's just use a 1% number, for instance. So if they manage $1 million of yours, they're charging 1%. And let's say that you decide one day you and your wife decide you really want to pay off your mortgage, and you have $200,000 left on your mortgage. And so you go to your advisor and say, gosh, this is really important to us. It's one of our top goals. We really want to pay off our mortgage. Okay, right now we've put somebody with a really clean, clear, transparent business model who's a fiduciary even in a conflict. If they tell you to take the $200,000 to pay off your mortgage, then they are actually, their income is going to go down because they're going to now be only managing $800,000. So the good ones will, of course, say to you, wow, I see how important this goal is to you. Please, yeah, I think let's go do it. Here's the $200,000. And I've watched plenty of real financial advisors do that all the time. In fact, they may even suggest it. Hey, you mentioned to me that paying off your mortgage is really important. Why don't you do it, right? So that's a really easy example of a conflict that needs to just be openly discussed and managed.
Yeah, it's a difference, if my math is correct, between a $10,000 annual fee and an $8,000 annual fee, which is certainly not nothing.
Exactly right. Yeah, without a calculator you did that, huh?
Well, again, the writings of yours that I have read are noteworthy for their clarity, ordinary language without being at all dumbed down. I mean, it's ordinary and elegant language, in my opinion. But they are characteristically added to by your graphs and drawings, which take the concepts and represent them graphically. What got you into making drawings in this context? I imagine you were making drawings all along your whole life, but what got you into employing these drawings in your chosen profession?
It was really just almost an act of desperation, right? I was sitting across the table from people trying to make some really important decisions, and I felt like it was my job to explain a concept to them that I felt like was really important for them to understand in order to make the right decision. And I mean, this happened to me all the time. I would just get blank stares, no matter how hard I tried to explain it. And one time I just remembered looking and seeing the whiteboard behind me, and I said, no, like this. And I drew a couple boxes and some arrows, and they understood. And I remember they said, oh, now I get it. And that really was when the light bulb went on, and I thought, well, I should just try to, if I can't reduce it down to a simple drawing with a Sharpie and some cardstock, then I need to keep working on it.
Well, of course, some people's brains shut down the moment they see a graph, and I might be one of those people, but I'll tell you the graphs you employ, the representations you employ for concepts in the relationships between concepts, how one varies with another, which might be graphically presented, are all immediately comprehensible to me, and therein lies a great deal of its appeal.
Well, thank you. Yeah, that's the goal. I think of them as shortcuts, right? Shortcuts to an idea. I also think of them as souvenirs, shortcuts and souvenirs. Shortcuts to an idea and souvenirs of the idea.
And these
to help you remember.
And these shortcuts and souvenirs got you into the New York Times.
Yeah, it's kind of it's a crazy world we live in, isn't it?
Well, that's how opportunity works sometimes, I suppose.
Yeah.
Well, Carl Richards, it's been a pleasure talking, and I thank you for joining us.
Christopher, thanks for having me.
This has been Accredited Investor Markets Radio. I am Christopher Cahill. Accredited Investor Markets Radio is produced by Stephanie Strait. Let's do this again sometime.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions.